Hey there, welcome to the channel. That was interesting. I use this, meeting, I guess Zoom software to record these videos because it just kind of works for me. I know it's not the best thing out there, but it just had this woman's voice come up and say, "This meeting is being recorded." So that's new. I guess the software updated on me. Oh, all right. Well, hey, so welcome to the channel. So just do a stock market update. I haven't been really looking at it very much at all. But let's step back and look at the big picture of the SPY here, which is the ETF for the S&P 500. Reasonable enough approximation of what the overall broad stock market is doing. So we see that in the last 2 weeks we've had some kind of red bars here. We've kind of had some pullbacks, but in the big picture nothing's really changed. And if you look at this, so you look at like what happened over here in the last 2 weeks. So now I'm doing this on Saturday, so we have 2 full weeks of bars here on a weekly chart right here, right? And you can see that we're still just in this uptrend, and we're in this it might be a little channel, but it's really just an uptrend. And so there's a lot of, like, in some circles there's a lot of consternation about what has happened in the last couple of weeks, but in the big picture there's nothing here. I mean, yeah, we came down and we touched in this case the 10, which would be like the 50-day, yeah, the 50-day moving average. We kind of touched and came off them. So the overall trend is still intact. We are in, what are we, in May, right? Let me see what the date is here exactly. Yeah, May 22nd. They always have that adage, sell in May and go away. It's very interesting that very often doesn't really work, and it probably very often is just not really a useful thing. So if we look short term, so why do things not act correctly? Okay, there we go. If we go short term, so yeah, so you can see it here in the short term. You can see how we've had these pullbacks. But so looking at the major average, you see like what had happened here. Like you look at this area here and you see that we, really were pretty far away. Like I have this short-term average here in purple, the 21-day. That's this like day trading crap. So ignore that. But the 50 is a more useful one. And you see that we, found support here. Here we did find support, but we did crack below it, and it was battling for a few days there back in March, but it did eventually come out. And then what happened here? So this is what's happened this week. We've had a correction and a pullback, but to the moving average, and now we're off it. And what's interesting, see, we're kind of at this inflection. I see this as, what is this? I see this as kind of a little W consolidation pattern. Now, could this kind of consolidate? But it's also a setup. It's set up. It couldn't break out from this point here, but if it's set up to do it. You can imagine on Monday, for whatever reason, if it gaps up a little bit, it just could really, just kind of continue working up. I mean, it's very easily, you can see it's set up for that. If you were in a short kind of position on the S&P, you're in a bad position, right? Because if you were like, in a short, you had to kind of break through here. If you were short, you really needed the breakthrough, and it didn't break through. So you're in a sticky wicket. You're kind of in trouble there if that's the position you're in. So the other one I have some of is this XL. Why? Okay, let's check this out. I get frustrated when the computer doesn't do what I want it to do quickly. Okay, and so here's the consumer staples. And this one, is actually, once again, performing a little better than the S&P, right? Because you compare to what we have, we still aren't messing with the highs. So if you looked at, when we looked at the S&P had done something like this, came down, and we're in this little area here, right? And so we have a setup for it to kind of bull here, but we're not, I don't think we're exactly at the high, but here the setup is we're at the all-time highs again. So here it was a little stronger W setup. Once again, like if you gap up a little on Monday, I mean, we could gap down, of course, I can't predict that, but so it's acting a little more strongly at this point. So Yeah, that's that. And then, so what happened this week too is I'll just kind of spit this out. Why doesn't stuff respond? Okay. It's called focus. That's what you call it in programming. When you're dealing with GUIs, it's like, where is the focus? You have to steal the focus. You have 50 programs running. It's like, okay, you need to get the focus, and then you can do stuff with it. Okay, so actually, what I had done is I actually bought a little QQQ this week, and let me explain. Let's see if I can find it. Why does it do that? Okay, yeah, I did buy some, and the reason is because because exactly what we're seeing here. We had this pullback, we have this W setting up, we kind of have this resistance area here. We kind of broke out of it. Now it did correct on Friday and it pulled back down. So this is like a dark cloud cover. This guy is, so it's bearish. It's kind of so definitely Friday's trading is a little bearish, but I mean you can just kind of see that it's setting up, and I just. Really, I bought a little position just from the perspective, trying to keep my mind open. I really, honestly, and that's not maybe the best way to trade. But the reason, I'm doing that is because I'm like, look, it's just overdone. It seems to me like it's kind of overdone. And so to kind of keep myself from getting out of control, to open my mind to what the possibilities are, I'm just kind of taking a little position. I just kind of play these tricks with myself. I'm very small, but and this is what I did with this RK. Once again, I've been negative like on these things, right? They, Kathy Wood is like, my guess is very overextended into these EV plays, and there's a lot of risk there, and I certainly acknowledge that. But on the other hand, we had this kind of situation. We had this, various forms of wedge and resistance and a consolidation. This, call this some kind of consolidation. We broke to the downside, but what I'm seeing is that here we are. We've kind of turned this corner. Now it's really ugly looking. It's not very good at all. And let me see just a minute. Why does that? Okay, I need to turn notifications. Just a minute. Stop coming up. It comes up with notifications that are like a week old. Oh, incredible. Okay, so back to this. So we're looking at RK. So I had bought a little bit, my arrows where I did a little buying. I think I bought some calls. This is a put, but no, I actually bought a call. So I'm actually long it a little bit. And then it kind of next day, of course, immediately makes you pay for that. But what you do have, it's kind of overextended, right? It is overextended to the downside. So we have a little bit up, and now it traded very similar on Friday. You can see that it kind of like sold off and everything. And what I could do here is, let's do this. Oh gosh, respond. Wow, annoying. It's funny. I can see it's giving me the wrong cursor, so it's not awake. And so yeah, so we had this consolidation, and yes, this put had been closed. I closed that. Yeah, I think I closed it on this day. I'd have to research that. And now it looks like we're kind of turning up. But so the point now is, we will have significant resistance here. So you can see that, at this point here, support, resistance, support now turns to resistance on the way up. So you can see, you wonder if like Friday it already kind of hit the resistance. So we'll see what happens with that. Maybe we'll lose a little bit of money on these ARC calls. It's possible. But I just wanted to keep it open because I think I wanted to, like I've been talking about, I've been kind of negative on these, and I've been trying to I just wonder if there's opportunity, and that's why I'm just kind of trying to pay attention to it. So on the weekly, this certainly is not great. You had this incredible move up, and it just got beat up and then hung around the averages and broke down again. So what that means is, in terms of if I'm going to trade this, this like little trade is a short-term trade, because I'm going to come up into this resistance. We'll see what happens. I mean, I suspect it could maybe go up a little more and break through that resistance, because if you look at it, it's like we have this downtrend line, you know, why does it do that? Some kind of downtrend line like that. You have this, you know, line that's now going to be previous support that'll be resistance. So as this thing comes up, it's kind of resistance here, but it may go further out to this 50-day moving average that's now declining. But this is not a long-term bet. This is not like a hodling situation, not holding this and being like, oh, I'm going to hold on, because it's got so much work to do. This is just hey, look, it's way oversold on your stochastic and your RSI too. Yeah, well, yeah, your RSI, it's kind of a little bit oversold. I mean, the thing is, if you look at this RSI, people talk, oh, it's oversold when it's below 30, and it's sort of arbitrary, and you should understand that. Like up here, when you look at the RSI, so RSI is relative strength index, and it's kind of like, I forget how you calculate it, but and it's really good when you're using an indicator to just look up how it's calculated. But it's kind of like relative strength with itself, and meaning that it's like how strong the price action is with the stock itself. So it's a relative strength indicator. So basically you could look at it and say, if you look at these bars and say, look, if the stock is closing near the high of its range, that would be indicating a positive, strong trend, right? Closing higher, higher lows, higher highs, closing in the top of its range, that all indicates higher, and that would push the RSI up. The reverse applies. These big red bars, you're closing at the low of the range, et cetera, that would kind of push RSI down. So you can look up the calculation for that, but that's kind of what it's doing. So this is always relative, the RSI by the calculation, I don't think, it can't go to 100, I don't think. But so coming back to my point here on this little technical indicator here, is that, see, in this period of time, so in this period of time, you look at it and say, oh, you're overbought, you're overbought. Well, you can't just short it when it's overbought, right? Because this thing like here, so yeah, it was overbought this whole time, and it still kept going up. Now, here you can make this argument, look, it way overbought, and it did finally correct. I mean, in the big picture, but it didn't correct very far, and then it's kind of reversed. So you look this whole period of time, it's just up in this overbought for the most part. And that's very typical. You see when it's moving really strongly, it'll be near the overbought. And so it doesn't necessarily indicate any kind of a way to short it or to get out. I mean, it does indicate to get out, but the problem is if you're, for trading, right? Because get out, sure, short, but this is on the day. Like, you can't be short, or you don't want to be out for more than a few days before you would be back in if you were trying to play this for a longer term. Same thing here. Here you got a good week or something. Here you get a day, et cetera, et cetera. So, the indicators are always misleading, potentially. You have to kind of acknowledge that. And it's really important. So like if you have someone that you take some trading course, and you're either using RSI or using stochastics, you got to look those up and kind of refresh. And I should actually look them up too. So I'm just refreshed on what they actually are, because you're relying on them for a lot. Silver, I have some silver. I got some here. It's okay. It's kind of working. We corrected definitely last week. I don't know. This bar way up here is going to be a problem. It sort of seems like it's kind of settling into possible uptrend, the 50s turning up, et cetera. So we'll see what happens with that. That's good. And then QQQ, we went over that. I bought some of that a little bit. Yeah, that's kind of it. Tesla doing its thing. What about some high beta stuff? Neo, Enphase. They kind of have similar charts. This entry in Enphase kind of ran up more. So it kind of, sort of the implication would be, you kind of wonder, seems like some short covering in there, because these are really moving up. When you see a stock in it reverses or really has really huge up days, or really huge down days, that's, definitely for the up days, it seems like, the most immediate reactions are probably short covering when you see it pop up in huge amounts. It's like at some point, when you short and you realize, see, you're overextended down here. Let's go to 6-month chart. If you were short this thing and you've had some great success, depending where you had entered short, and you can see that, you're nervous here, you're definitely nervous here. This thing gaps up, is above, and then it breaks down. So depending where you are, you know, okay, that's all great. But then at some point you start having these really strong days, and then it just goes. And so, you know, you have two things. You could be taking profits, you know, hey, I better lock in my short. And, you know, the more people covering the shorts, meaning that creates all this buying pressure. And that's where you get the percent float short, where people look at that, because if you have a lot of shares shorted as a percentage of the float, so the float is the number of shares out there. So if you have 1 billion shares out there and 500 million are short, that means that you have essentially a powder keg of buying power in there, right, for half those shares, because if it starts moving up on them, and that's where the short squeeze and everything comes in. And unlike, well, no, both have margin pressure. Like if you actually short the shares, you do have margin pressure. You know, if the stock starts moving up against you, you know, you may be required to put more money in to cover that position. So when I see these bars, like these bars and these, you know, usually it's like, usually it seems to me it's like shorts coming in, because like when people just hear the news and are like, oh, I'm going to go in and buy it, that's awesome news, and just go buy more. I mean, even the Meet Kevin dude doesn't seem to be that irrational, you know. But if you're on the short side, you have to be a little irrational, because you're like, oh crap, you know. And you know, hopefully you took some profits. If you're down here at this bar and you were short for some period of time, even from here or wherever, or even here, you know, you want to lock in your profits. So yeah, so that's kind of, I think that's it for this stock update.